Mr. 𝗘𝗀𝗹, welcome to the show, man. How is life in Minnesota?
Today it's a perfect day. The day we're broadcasting is like 70 degrees and sunny. So I have no complaints today.
Who is 𝗘𝗀𝗹 and how are we going to talk about real estate today?
So I've been in real estate, other than a short period of time I was in retail. I've been in real estate in some fashion pretty much my entire adult life, whether it was in construction, banking, real estate banking, land development, home building. I've kind of ran the entire gamut. And I love it. You know, our company motto is we improve everything we touch. And I mean, there's not a better industry than to do that is in real estate, because we're really creating the communities that people are creating memories in. You know, that you're learning how to ride a bike and you're throwing ball and you know, the hope is that they're good memories. And so we in 2011 went back off on my own again, started 𝗪𝗏 companies and worked a lot with banking because there was a lot of distressed assets. And that's evolved and gone back into traditional development with a primary focus on for sale housing and build for rent housing. And we do a little bit with some apartments and commercial as well.
Are you currently doing any build to rents?
Not that we're offering any investments on. 𝗪𝗏 Capital Partners is actually a newer entity for us. It started about 2 years ago. The idea came, we offer, many of our employees are able to buy houses at cost. Periodically. And so a lot of them will take advantage of it. They'll buy the house and they'll turn it into a rental. And we've got one individual that has quite a few of them. And we were conversing 2 years ago and talking about the tax advantages I have being self-employed versus the lack of tax advantages he has being an employee. And that just really bugged me. And looking at it going, well, you know, he's at a significant disadvantage. How do I help him build wealth? How do I help my team? And one thing led to another, and we started 𝗪𝗏 Capital Partners to allow our team members to have some of the same tax advantages we have. And ultimately we said, well, let's just let anybody that wants to co-invest with us and build wealth with us, let's do it together. And so ultimately we opened it up to anybody that wants to. And so on 𝗪𝗏 Capital Partners, we're only showing active investments we're allowing investors in on right now. And, you know, we'll continue to offer new ones, but that's why you're not seeing any build for rent, because we don't currently have any that we're in the early stages to be able to offer co-investing.
When you say restricted stock, what does that mean?
So it means there's rules around it. So they can't just go out and sell that. They can't just go in and cash and get the money back. If it's unrestricted in any way, then there's a taxable event there. But if it's restricted, they can't take that money out. And so there is some risk, you know, for the employee that's putting the money in, but they can't take that money out until certain events happen. Once those events happen, then they do have a taxable event, but it gives them the ability to compound their returns. And that's really common. We're not a publicly traded, but that's really common where publicly traded, they'll entice somebody to come work for them, give them restricted stock. And there might be a date, there might be certain things, performance metrics that have to accomplish before it comes unrestricted, meaning before I can actually sell the stock and get a return. But the nice thing also in the publicly traded companies is now that stock is increasing in value and also gaining interest. And so that's what we tried to mimic similar to that. And now they can, you know, build wealth pre-tax.
And these are single family developments that we're talking about. And these two developments that you show as active investments, what are the price points that you guys are kind of like your little sweet spot?
We're an entry level first time buyers. We do have some empty nester product, meaning they don't want stairs. You know, they're done with the stairs. The kids have moved out. We want to be on a single level. We have some of that, but most right now, just because of the market with interest rates and the need, we're focusing on the first time buyers.
And what's your template for beds and bath and square foot? Like, where's the sweet spot for you guys on that?
Most of our square footage, we're about 1,400 to 2,400. You know, it's interesting, since COVID, the need for bedrooms has gone up because there's a lot of people that are working from home. So I needed my number of bedrooms I had before, but now I need to add one because I work from home and I need an office space.
Right.
So we're seeing more of a need since COVID that people want to see 4+ bedrooms. which can be pretty tough to get an entry-level home and having 4 bedrooms. But we're finding too, they're okay with smaller bedrooms and more of them because of that. So most of our homes are 2.5 bath, 3 to 4 bedrooms. An interesting thing about Minnesota is they use their garages here. People don't want to park out in the snow and the freezing cold. And so most people want a 3-car garage because I need one for my bicycles and my garbage cans and my Christmas decorations and everything else. And then I need one to actually park my car in.
So these single family homes, kind of in that little sweet spot to develop these things, how many units are you putting in an average development?
Average, we try to hit 100. The effort to develop 10 lots or 100 lots are pretty much the same. Getting through the city approvals and everything. And so, we typically don't touch anything under 20 units. And, the ideal is the 100 plus or minus. The two that are on our website currently, one of them's 39 lots and the other one I think is 105, if I'm not mistaken. So one of them's right at our sweet spot and the other one's a little bit smaller. Although the 39 is a phase 2. So when we started that project, I think we were about 90.
I was just getting to that. So when you go into phases, then you actually become your own competitor because some of those houses that you've sold are now reselling and, create that challenge for you to battle against yourself with the homeowners selling their homes.
Yeah, it's tough when you're in a subdivision, you're a homeowner and circumstances, most people don't buy a house with the anticipation of moving into the first 5 years. But work circumstances, family circumstances. But it's really tough for those sellers because they've got a home that's 3 years old. We're selling down the street a brand new home that's never been lived in, brand new carpet. You don't have to worry about what's gross in the carpet. And so it really is tough actually for them. For us, it's not as bad, but for them, it's tougher because what are you going to choose, the brand new home or the one that's been lived in for 3 years?
Right. Yeah, absolutely. And how are interest rates affecting you in this last year? What does that affect the sale price or the velocity at which you sell? Tell us a little bit about what that's felt like for you.
There's 2 components that we look at. There's the interest rate where we borrow money for the debt side of development. And that's affected us just from, a margin standpoint. We're paying twice as much for interest today as we were just a few years ago. The greater impact is the buyer's interest rates. Interest rates as of the day of this recording are hovering around 7% for a long-term 30-year interest rate. There's a lot of people that have interest rates on their homes that are at the 2.5% to 3.5% range, and they're pretty tickled with that. Well, all of a sudden, when your interest rates double, the buying power of the consumer goes down pretty dramatically. And so I might have been able to afford a $500,000 house just 3 years ago, and now suddenly I can only afford $350,000. And that's the primary reason why we focused on the first-time buyers and that entry-level price point is, we see it as there's a funnel, and at the top of that funnel, there's that many people can buy it. And as you get down on that funnel, it gets narrower and narrower, and there's less people that can afford that price point. And so we've really had to focus on affordability and not so many amenities. The ultimate amenity right now is price versus a really fancy kitchen. And so we've had to do a lot of that to really pare that back to make it more affordable because it's just getting out of reach for a lot of buyers.
How are you feeling the money market right now, Dio? What's that feel like for you?
I think I'm not smart enough to predict what the future is going to be. There's the old saying, the market can stay irrational longer than I can stay liquid. And so we look at every deal and say, what is the worst case? What's the best case? And can we live with the worst case? And if we can't, we don't do the deal. But if you look at historical interest rates, you look back in the 60s, interest rates were pretty low. All of a sudden, they go up in the early 70s. And a lot of people were sitting there saying, I'm going to wait until the interest rates come down. And I'm going to wait, to do anything for opportunities. Well, guess what? That didn't happen until the early 90s.
Wow.
So there's a lot of people that sat around for over 20 years waiting to see what the market was going to do before they acted. I'm a huge believer in there are opportunities in every market. And if you're investing in single families right now and that thing pencils and it makes sense, do the deal. Because if interest rates go down, how much better is that deal suddenly if you can go refinance it?
Yeah.
And so make deals happen, because a lot of people that have the attitude right now of I'm going to wait and see. Well, think if you had that attitude in 1970s, the early 70s, you lost out on a lot of wealth building over the next 20 plus years waiting for your turn. There's always an opportunity. You know, what we said at the very beginning of this conversation is you'll find what you're looking for. And if you're looking for problems, you're going to find problems. You know, if you're looking for reasons not to be in the market, you're going to find them. But equally, if you're looking for deals, you're looking for deals that'll pencil, they're out there. I mean, we're still making a lot of money. And, you know, you're out there doing deals still and making a lot of money.
Absolutely.
I think that's a key thing.